be a price where we short it. We're just trading it because that's how we make more money and we feel safer doing it for our families. You know, there's definitely nothing that says it's going to go to 12,000. Hey, we don't.
Sorry, guys, I'm eating. All right, so I longed XRP. As you can see, took out all the liquidity from here. You know, it retested here, and you know, I can't. You see this? It's too hard to see if it broke the channel. So I went on the, I think, 1 hour. Yeah, I went on the 1 hour, fixed these lines, and I saw that it did a triple bottom when breaking the channel. So that's why I went long. And we're at some pretty strong support here. Look how I reacted, just went back up. So went some, you know, decent profit there. May start may put my stop loss there, may move that. So when I'm watching CryptoFace and Garreth Soloway too.
I don't even know if it's going to go to 20. I mean, you think it will, but maybe it doesn't. So I mean, everyone should have a plan, right? The most important thing is to say to yourself, okay, well, where do you see it in 10 years, if that's your longer term horizon? And then how am I going to leg into it if it does do that, right? So for me, you know, I might think it's going to sub 20,000, but I'm going to still start accumulating above 20, just above 20, but I'm going to just buy little small positions just so I have some skin in the game in case I'm wrong, right? And I'll probably do a very structured thing, not emotional, no emotion, right? So maybe I'll put up my first order at like 20,500, then the next one 3,000 below that, then 3,000 below that, and always just base it on that, not be getting emotional and say, oh my goodness, I got to get all in or all out, but just be structured and have that plan, right? And the idea is that I do believe that Bitcoin will eventually be $500,000 or $1 million. And so I do want to have some of my assets in it. It's just, again, waiting to try to get it lower in this deleveraging event. And I think it's also important to remember that Bitcoin has never been through a tightening cycle or a high inflation cycle, right? Since 2009, interest rates have really never been above 3%. The 10-year now just came back under, but we're seeing the Fed tighten by 50 basis points. It's a whole new ball game. And so to think that there's not going to be at least an 80% correction when that 80% correction happened even when the Fed was easy money policy. Now they're doing the opposite. So it's like, it is a scary time. There's no doubt about it.
Yeah. And that's so pretty much every day, you know, I'm always speaking with someone messaging me or a friend talking about that. You know, Bitcoin's never gone below its previous swing high, swing low, swing high. Never, you know, once it hit an all-time high. And I'm like, you know, I get it. Like, I understand, you know, we can look in what we only have 10 years of looking in the past with Bitcoin, but we've also never dealt with this money printing and inflation. And the inflation numbers aren't even true because they change the way they calculate those numbers. Like,
right,
you know, the truth is inflation is how much more are you paying for that box of cereal than you did last year? Oh, you're paying 50% more? Well, inflation, in my opinion, you know, well, I mean, it's not really inflation, actually, excuse me, but you get what I'm saying. You know what I mean? Okay.
You know what they do, and this drives me insane, and a lot of people don't realize it, but instead of raising the price on like on like ice cream or on a cereal box, what they do is they don't raise the price, they shrink the box, right? So you think in your head, you're like, oh, I paid like $2.99 for that last year, but literally you're getting like 75 or put 25% less in the box. So that it's actually like they did raise the price. But yeah, they do that all the time. Look at like, I still remember back in the day, like a thing of ice cream was like so much bigger. Now it's like I could eat that thing in like 2 spoonfuls.
Garreth, I don't know if you've seen my spiel on the Nestle drumsticks.
I haven't, but now I want to see it.
Oh boy.
Send it to me.
Man, I'll send it to you. We won't watch it now. But and it was a video where I was in the video. Man, so Nestle drumsticks with the caramel inside and the peanuts on top. You know what I'm talking about? They're one of my favorite desserts. Yeah. I've been buying them and eating them as a treat for a very long time. Well, this year, within the past year, drumsticks have decreased in size, I estimate, between 30 to 45%, closer to 40%. And I've showed it on video. Now, the box doesn't say mini drumsticks or kids lunch. And you know, when I look at the price of, I pull up the price of sugar. I don't know if I'm looking at the right thing, the right chart here. I need to S1. Is it S1? Sugar. Okay, let's see here. Sugar SB. Okay. So if we go to November of 2020, the day after the election is where I set my mark. Okay, let me do. Are you still able to see my screen?
Yeah, absolutely.
Okay, cool. So November, boom, here, we'll put it right here. Okay. Sugar has, well, as of today, gone up 30%. It was up to 40%, right? And that's, you know, Nestle's main ingredient, man. The price of their main ingredient went up 45%. And so, bro, Nestle drumsticks, they decreased their size by 30-40%.
I believe it, man. It's happening everywhere. And then what's really tricky about that is, like, if you're, I mean, you know, luckily I'm in a pretty good position. You're in a good position financially, but I mean, there's a lot of Americans that are feeding a family of 3 or 4 kids, right? And they're not going to be like, oh, well, the price went up, so I'm going to eat less. I mean, they're kids, they're growing, right? And it's tough right now. The inflation side is really bad. And you know, I do hope that they figure out how to get it under control fast, because I don't think the prices are going to ever go really down, but you just don't want them to keep expanding at this rate this quickly, because that's really bad.
And, you know, when I look at, and this could be a decent segue into oil, actually, these commodities aren't even at all-time highs technically. And it's like, well, in my opinion, if we're not even at the price where it's been before, things, in my opinion, are worse than they were before. So one of my cases for the debate against you with oil and commodities was, we haven't even hit the all-time highs. And if things are worse, shouldn't we hit all-time highs and then some, you know? Yeah. Now, I also know that in these depressions, pretty much everything goes down. And so maybe you could help shed a little bit of light for, you know, like, if the market tanks, is the price of sugar going to go down? You know, gold, I think, is stuck at 2,000. I don't know how it's ever going to break 2,000 when 70% of the gold sell paper is from the same 3 banks. And I don't know what the hell has to happen to these banks, those 3 banks, in order for gold to ever get past 2,000. They got to go out of business. That data was from 3-4 years ago, man. I've been trying for the past hour. I've been trying to find that document. But I haven't found it. But 2-3 years ago, 70% of the gold sell short paper was just from the top 3 guys, and there's just not enough money to. There's just not enough to buy it, even when there's lines outside.
Yeah, I mean, I think that you know, it's important to remember that you can have a recession or a depression with inflation. That's scary. The scariest word to economists and to really the public is stagflation, right? So usually when you have inflation, it's coupled with economic growth, with higher wages. So if the price of an apple is up 10 cents, well, everyone's making 10 cents more so they can pay for that apple. It doesn't really hurt them. The worst thing is when you get a recession where people are making less or losing jobs and prices are still going up. So again, I think that's what I'm starting to be concerned about later this year into 2023. The Fed is trying to get inflation under control. I honestly don't think they will fully. I think inflation will come down to like 5% maybe per year. And then I think it's going to be sticky. And the main reason I think it's going to be sticky there is because, you know, wages have gone up for almost everyone, right? I mean, if you think about right now, there's 1.5 to 2 jobs for every person that is looking for a job. So they're having to pay more wages to get that person to take that job because there's a lot of competition. The problem with that is that they can't pass. Like if you're going to pay someone 50,000 instead of, or you're going to pay them 60 instead of 50, you can't pass 10,000 right along in your widget price. So what you do is you say, okay, well, this year I'm going to raise widgets by 10%, next year 10%, next year 10%, and you kind of pass it along over time. Otherwise, if you don't pass along the inflationary costs, you go out of business, right? I mean, you can't make money. So that's my concern. And then I think, again, the Fed is going to be put in a position where hiking rates, you're already seeing the stock market decline. That's doing away with the wealth effect, which was one of the reasons inflation got so crazy. And then crypto's done the same thing. So you're going to have people that feel poorer because their 401ks are down 40%, their investment accounts are down 40%, and they're not going to want to spend money, and they're not going to feel like that. So it's a crazy time right now, and it's one of those times where I do like gold. I personally think oil will come down. I think you're on the opposite side. You're looking for oil to move up. So yeah, we can talk about that more though, for sure.
Yeah. If we had this debate last week, for a few days, I would have been hooting and hollering. I got natural gas up here. I hit a little. I've been in natural gas, oil, war stocks since November 5th, 2020. I mean, I went heavy and I've added kind of more throughout then. It's been just an absolutely amazing plays. Common sense to me. So last week, I would have been better for me because it did come up a little bit. It's coming down a little bit, but let me pull up some oil stuff here. Okay. Because it's still, to me, it looked like this is they all pretty much look the same. So to me, it looks like it's, oil doesn't move as fast as crypto. It's not as volatile for the most part. Although lately, oil, pretty much everything's acting like crypto. So to me, just with my different indicators and flows, it looks like it's just repeating the same thing that it has been, and it can only go up so fast. It is not hasn't even reached previous highs. In 2007, oil was $150 a barrel, and I feel like we can at least get to 150 and then more. But the stagflation, to be honest, just makes me not know what the hell is going to happen. But then with the Russia and the oil thing and OPEC, I know these guys, I know these politicians love stretching out these perma wars, and things like that just don't end fast. And it's like, I feel like they're almost testing how much pain people can take. And I feel like people, media-wise, it's that we're taking the pain, and so I feel like they're going to increase it, man. But you go ahead and talk about oil.
All right. Yeah. You mind if I share my chart?
Yeah. Let me. Yeah. Please do.
Awesome. So kind of, and I'll just talk in while you put it up there, but basically, this is the monthly crude chart. So one of the things that I think is fascinating about the monthly crude chart is that, let me get rid of those lines there, is that if you put a trend line from the low in 2008 to this low in 2015 to this low, now remember, this is where crude oil went negative, which was just insane, but this is the body low right here. And if you stretch a parallel perfectly up, it actually gave us the exact high that crude went to when it hit $130. So,
added more to the position. So about
if you go look at the last 13 years or so, crude has stayed within this range. So that right away gave me a little bit of pause when everyone was saying, hey, it's going to be at $200 a barrel. I said, wait a minute, that doesn't make sense when you're hitting this trend line up here. And so far we've pulled back. The biggest thing I can see is that, like, in 2008, when we got up to $140 in crude, the U.S. was a very small producer compared to what we're doing now. So now we're basically the biggest producer in the world of crude oil. So that's the positive. I also think that when
we're producing, you think we're producing more oil than other countries and the Saudis and stuff still?
Yeah, I believe by individual, not with OPEC. OPEC has all of the countries combined, but I believe we are now and listen, I could be wrong, but we're right up there. But I think we are the biggest producer of oil out there at this stage, country wise. Again, definitely verify via Google if you guys want, because I'm not 100% sure, but I did hear that. But one of the things to kind of keep in mind is that what we've seen is as oil went up to 110, 120, $130, we saw gasoline prices basically up to all-time highs. And that's what impacts the consumer, right? So the consumer really recoiled at that point. And I knew people personally, like friends and family, that were like, hey, I was going to drive cross country, or I was going to drive. I'm not going to do that because it's going to cost me like $500 in gas. And so you really see this demand destruction where when oil seems to get up to that 110, 120, 130, you see people stopping their normal behavior and consuming less. And so it does seem like to me that if the Fed is going to be successful in doing what they're trying to do, which is raise rates and bring down inflation, and by raising rates, they're going to slow the economy, then ultimately the demand for oil should decline, which should bring prices in. The only other caveat, the only other thing too that kind of makes me think that is that if you look at election cycles, going into midterms and elections, it's very common to see oil roll over as the politicians want oil lower. Like you never want to be in charge going into an election with oil skyrocketing, right? So it also kind of reinforces that idea that you'll sometimes see oil come in the summer months into November when we're getting into this midterm election. So it's just kind of little things like that. But the demand destruction, I mean, we're seeing Europe potentially being in a recession now. There's demand destruction there. I mean, really all over the globe at this point.
You know, going to Google, you are right. This is 2022, according to Google. My only question would be, is if it's American companies that could be drilling offshore, some in another country, but according to Google, United States is the number one oil production in 2022 at 11,567,000, so 11.5 million barrels a day, followed up by Russia at 10.5, and then the Saudis at 10.2 million barrels a day. So I guess I think about gasoline in Europe is more expensive than in the States. Let me look up our production in 2019 to see how much maybe more we were doing. Okay, so in 2019, we were doing 17 million barrels per day. That was during the Trump administration. So we've sliced off, we went from 17 down to 11. So that's what, 30-40% cutoff. So damn, I mean, I guess
when that stat was given, because I doubt that stat is based on current prices. That could have been, a couple months ago or 6 months ago. And when crude oil was lower, I'd be curious we know that rig counts go up, up and down, meaning that when oil price is low, a lot of oil companies shut off their rigs because it's not worth them drilling. They don't make money by drilling that particular rig. But then when oil price goes up a certain point, they turn them on. So I'd be curious. Yeah, it's tough to get real-time information like this, but certainly it's an interesting stat, and it is worth taking note of it.
Yesterday, I read an article. I believe it was Chevron had their most profitable quarter or year ever. I believe it was quarter in profits, and so they're kicking butt. I'm not gonna say that you've convinced me. In fact, I mean, technically this pattern, could be a big bull flag, but it's also been 13 years.
How patient are you to sit in the trade?
Yeah. I'll tell you what. Today I took some profits on oil, and I've been taking a little bit of profits. I took profits on a lot of my positions. I added a little more shorts. Let's switch it up a little bit. I want to see, can we look at Netflix, Garreth? Can we look at Netflix? Sure. I'm short on Netflix.
You're short and I'm long. Oh my
You're long on Netflix? Well, I mean, when did you long? Today?
I've been long, so I've been accumulating kind of all the way in this lower range here. Okay. My last ad was in kind of like the 175 range right down here. So up a little bit on that, but net I'm still down on the position here. Okay. But I've been accumulating down here.
I hate Netflix. I think they have shitty movies, and kind of like my number one. I tell you, it's been one of my favorite trades in the standard market so far is Bed Bath and Beyond, bro.
Mm.
It pumped up to 20 something dollars. We got in at $27.11. And it's down to like $10 and something. So that one killed it. I wish I shorted Peloton because I think that's a gut.
Oh,
I think they
yeah.
have no business being a publicly traded company when you're selling treadmills in a worsening economy where people are living in less square space. You're buying a treadmill, get the hell out of here. I understand how with COVID for the last few years, people couldn't go to gyms. And so I understand why they inflated, but with all that fake money, I want to find more companies like Peloton that I don't think belong in the publicly traded market. So I'm going to ask you, I asked my Twitter, is there any shitty companies that you think still might have some room down that you can think of?
Oh man, that is a really tough question because I mean, there are so many stocks out there that have just been clobbered. I mean, Netflix is just one of them. I mean, some of the ones I've been accumulating just for, and again, you know, just to preempt and say, I'm a trader, so I'm in and out relatively quickly. I'm not like, by no means am I in Netflix here for it to go back to the all-time highs. Basically, you give me 10, 20% bounce, I'm done. You know, I'm out of that. But I'm trying to think of what would be a good one here. Man, I mean, it's so many. I was just looking at Roblox reported earnings today. I mean, look at this chart. The stock was in November when crypto was at its high, $140. It closed at 23.
Roblox.
In the after hours, it's trading at 22, down another $1 on earnings. Just incredible.
Roblox, is that like the video game or am I way out? What is Roblox? It sounds familiar.
Yes. They do like kind of like virtual kind of building stuff, and you know, people can kind of build their own thing. I'm doing the worst. Probably people are watching this saying, "Oh my god, you guys don't know."
Guys, I'm going to go ahead and close this out. Okay.
It's like, well, dude, we don't care really what they do. We look at the charts, bro. Like we might have the slightest thing, so I'm not trying.
Yeah.
To make
So
it
this
sound
is
like
my trader, guys. I'm going to hold it.
because I know less than what I've done.
Here, I just description. Roblox Corporation developed.
Yeah, we got a green dot on there.
Offers Studio, a free tool set that allows,
you know, we got
developers and
a
creators
4 hour that closed above the range, which is strong
If
as
it's
hell,
virtual
which
reality-
probably needs to
okay,
retest.
Virtual reality, I think
See?
that's one that just popped up. I think virtual reality.
I think we should be going up
It's been
here.
around for so many years. It's had plenty of time to take off. Parents don't want to put goggles on their kids. I don't want to have goggles on myself. I'm going to run into shit. So, man,
Meaning price, should we go
like Oculus? Let me.
All right, guys.
Facebook owns them, right?
Who does?